Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Taking on Toyota, Nissan shares soar on a report of merger talks with Honda, potentially creating a new Japanese car giant and a major player in the global EV race. Israeli officials say a ceasefire in Gaza is a more realistic prospect now than at any time in the past year. Asian shares climb as traders brace for the Fed's final rate decision of the year. And as a 25 basis point cut is widely expected, focus will be on the central bank's rate projections. Well, it's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai in for Jumana Bursechi. Well, happy Fed Day. Finally, we are here. The final rate decision of the year from the Fed, with expectations widely that we are going to see a 25 basis point rate cut. But the question today really is going to be down to what we see from Jerome Powell. Is he going to take a more hawkish tone that indicates we could see the Fed heading for somewhat of a pause when we come to the month of December? And what will the dot plot show? Markets are expecting that we could see the Fed take one of the rate cuts next year off of the table. So those are the questions that investors will be asking and looking for answers to today. Looking at where we're shaping up heading into all of that, markets, to be honest, aren't doing a whole lot here. You can see that NASDAQ equity futures pretty much unchanged. U.S. 10-year yields hovering around 4.4% after the sell-off that took us up to that level last week. And then also the dollar. We've seen a lot of fluctuation over the last couple of days, and we continue to see that this morning. Not a whole lot of movement. One place that is moving a lot this morning, though, is Bitcoin. So we're seeing losses of 1.7% after yesterday. We saw the cryptocurrency rally to more than $108,000 for the very first time. Now let's get back to the Fed for just a minute and talk about those 2025 rate projections, because that, again, is really going to be where the market is focused today. And you can see here, when you look at this chart, that the market is pricing in 3 rate cuts when it comes to 2025. The latest dot plot projections came through in September of earlier this year, indicated that the Fed sees 4 rate cuts this year. So really, there is a discrepancy between market expectations and the Fed, and that is what we'll be looking for Jerome Powell to weigh in on today. Well, let's check in on how markets in Asia are faring now. Avril Hong is standing by in our Singapore studio. So, Avril, what's going on in your part of the world as we set up for the Fed later today?
Yeah, I think it's all eyes on those central banks, right? Not just the Fed, but also the BOJ tomorrow. So against that backdrop, the region's benchmark is hovering flat after 3 sessions of declines. Of course, we're going to be watching out for the dots, the summary of economic projections from the Fed as well. For the BOJ, the messaging of late has been pretty confusing, and no hike is expected from the BOJ tomorrow. Markets not even sure if we'll see one in January. It's overall a story of yen weakness. We are also keeping a close watch in Japan on some of the corporate developments, on reports that Nissan and Honda are exploring a potential merger. So the transport stocks are in focus. Among those that are gaining ground, Nissan jumping by the 24% daily limit. Essentially, this potential merger would be a sort of industry consolidation and help the smaller rivals to compete with the larger one, Toyota. So these are among the sectors that we're keeping a close watch in the region, with an eye on the Fed tomorrow.
All right, Avril, thanks so much for all of that. Well, it's a big day today with the Fed decision, of course, coming up. Market expectations firmly that we will see Jerome Powell deliver a rate cut of 25 basis points. Let's bring in Wayne Gordon, Commodities and FX Managing Director at UBS Global Wealth Management, to help us unpack all of the expectations for today. So, Wayne, great to have you with us on such an important day. Markets pretty much giving the green light to Powell today to cut by 25 basis points. Do you think that this is what the Fed should be doing? Is 25 basis points the right move?
Definitely is, Christine. So we do believe that the Fed are lining up for another rate cut today. As you rightly pointed out in the introduction, the focus will go squarely now to the US presidential inauguration after the Fed meeting today, and then also the market will be keenly focusing on the Fed guidance. We think we'll get 4 rate cuts in 2025, but as the market is not excessively priced here, and in that context, we do think that the backup we've seen in rates over the last couple of days, there is a limit to that, and we think that rates will come lower as we go through 2025.
All right, so that's interesting. So you see the dot plot basically holding then for 2025. When we consider what the hottest topics were probably on the table for policymakers as they began this two-day meeting yesterday, I mean, what do you think was the biggest consideration as they considered where to take rates?
I think obviously US growth is holding up very well, and that exceptional economic position that the US has relative to many other countries such as Europe and so forth, who are obviously facing a suite of elections, etc., going forward into the start of next year. Clearly, the tick up in inflation will raise eyebrows, we think, amongst some Fed members. But nonetheless, the overall trend is down. We think that the labour market will continue to soften. Obviously, it's remaining very, very robust, but nonetheless, we think it will soften. We think wages will continue to ease. And so long as we see that in the monthly data going forward over the next couple of months, we think that the Fed will still be comfortable enough to continue to support the economy by cutting rates. Now, we have to remember that US monetary policy is still in restrictive territory, and so the Fed will be keen to see real rates starting to come down. So we think that looking at real rates will be even more important than other factors in that context.
Yeah, and where do you see the dollar going from here? That's obviously been a big point of strength in the market this month and heading into the change at the White House in January. The UBS outlook for 2025 says to sell into any dollar strength. Why is that?
So we think that effectively the dollar is already priced a lot of good news and a lot of many of the policies that will be very encouraging for corporate profits, etc., from the new Trump administration, such as tax cuts and so forth, which clearly are going to continue to help companies boost earnings, and of course consumers also remain very robust. So the consequence of that has been that the dollar has strengthened, particularly against those currencies which have a little bit more risk, such as some of the commodity currencies, such as the New Zealand dollar, the Australian dollar and so forth, which have been under a lot of pressure relative to its cross to the US dollar, and also relative to some other currencies like the pound. We do think this dollar strength, though, has a limit. And the limit is that many of these policies, and particularly some of the claims about doing universal tariffs across the board for all US imports, we think could be negative for the US economy going forward. Not only that, but we don't believe that tariffs can raise the revenue that some of the projections suggest that they can. Consequently, the fiscal position in the US will also deteriorate. These factors will start to weigh on the dollar as we get through the first part of the year. Consequently, you've got to go back to fundamentals. Looking at near-term rate spreads, for example, the Aussie dollar looks very cheap relative to its rate spread to the US, and potentially the RBA staying on hold a little bit longer than just February. So these sort of signals, along with potentially pauses from the Bank of England, should actually see the pound and the Aussie dollar perform pretty well over the next 6 to 12 months relative to the dollar.
Yeah, and let's dig a bit deeper into your wheelhouse now and talk about commodities. What kind of returns are you expecting for 2025, and what are your top plays heading into the new year?
Look, overall, we think that commodities will be low teens to high single-digit performance over the course of this year. There has been a lot of risk built in to many commodity prices since Trump's election, in particular for industrial metals, where we think that the supply side remains very, very tight. Some of the boost we saw to supply in 2024 begins to roll off into 2025. And when we look at some of the major projects in commodities like copper, for example, we think that as we hit nameplate capacity in many of those new mines, we think that in the end, markets fundamentals will start to tighten up, and we expect deficit markets across the board in some of those key commodities like copper. Not only that, but there is some speculation that additional oil supplies will come from the Trump quote of drill, baby, drill. We actually don't see that at current oil prices. We think that oil production will be relatively constrained in the US going forward over 12 months. And with demand still remaining relatively robust, particularly if we get stronger stimulus in China, we would expect that oil markets will tighten as well. So we think that crude oil prices can actually rise from here, not fall. Let's go to gold. Gold has been a tremendous performer over the course of this year and really surpassed many market expectations. We think gold continues to go up, albeit its contribution to the broader index will be less. The largest contributions will come from base metals and energy.
Yeah, well, thanks for all that, Wayne. And just note that gold is up quite significantly this year, heading for some of the best gains that we've seen since 2010. So gold's definitely a space to watch, industrial metals as well. And one thing that you've also noted is that some of the concerns around oversupply in the oil market are overdone. So thanks, Wayne, for weighing in on all of that. That's Wayne Gordon, Commodities and FX Managing Director at UBS Global Wealth Management. Well, coming up, shares of Nissan are surging on a report the car maker is exploring a possible merger with Honda. We'll bring you the story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, Honda and Nissan are preparing to start negotiations on a possible merger, which could ultimately be expanded to include Mitsubishi Motors. For more, let's bring in transport reporter Nicholas Takahashi. So, Nicholas, this is the big story in your part of the world today. What do we know about the conversations that are being had around this potential merger, and what are the implications for Japan's car industry?
So far, we know that Honda is talking with Nissan about a possible tie-up, what shape that takes and when. The details are forthcoming, but we should find out hopefully early next week with local reports saying Nissan and Honda are going to make an announcement on Monday. That said, the potential merger between Honda, Nissan, and Mitsubishi, Mitsubishi already has a capital tie-up with Nissan, so that could sort of be a shoe-in. But this trio would be pitted against Toyota and its alliance with Subaru, Mazda, and Suzuki. So that would effectively split the Japanese car industry down the middle with the Honda-Nissan tie-up pitted against Toyota and friends. And that has a lot of implications, not just within Japan, but globally as well. Japanese car makers are struggling with hybrid car sales in the US and EVs in China. Hopefully these ties up, or they hope these ties up will help them pool resources, cut down R&D costs, and build it or scale in both markets.
And what do the companies have to gain from this? I mean, why consider Honda, Nissan? Why do a tie-up, and why now?
That's a big question right now. For Nissan, with its financial struggles that emerged last month after earnings showed cratering profits in the U.S. and China, forcing it to lay off thousands of workers and cut production, the benefits of a tie-up with Honda are pretty clear. I mean, it could help stem the bleeding and help the company get back on its feet. For Honda, it becomes more speculative. Honda's always been trying to build scale and partnership with Nissan, tapping into its production resources. That could help it reach its goal.
And do we expect that there'll be any opposition to this deal, any competition concerns, things of that nature that could hold things up?
Opposition is difficult to pinpoint. We have had reports today that Honhai, more commonly known as Foxconn, may have made a buyout bid for Nissan leading up to today's reports. So it's not a for sure done deal that Honda and Nissan are going to merge or connect capital ties in some way, shape, or form. And Honhai is or could be still part of that picture. That said, a Honda-Nissan merger has been sort of publicly discussed for years now, so it's not so much of a surprise that it's happening at Nissan's low point with fiscal profit down so far.
Right. Well, thanks for all that. Sounds like there are still a lot of details to be learned and perhaps a long road ahead from here. That's transport reporter Nicholas Takahashi. Thanks so much for all the insight. Well, back to the region now. Israeli officials say a ceasefire in Gaza is a more realistic prospect now than at any time in the past year. Bloomberg has learned a working group from Israel is in Doha this week to reestablish relations with mediators in the event of a breakthrough in negotiations with Hamas. Defense Minister Israel Katz said on Monday that a truce is closer than ever, while Foreign Minister Gideon Saar also told hostage families he's more upbeat than just a month ago. For more on this, Bloomberg's Paul Wallace joins the conversation now. So, Paul, good to see you this morning. Talk us through why we're seeing this renewed optimism around a ceasefire and the potential release of hostages.
Hi, Christine. We definitely are, especially on the Israeli side, seeing more optimism, and some officials even suggesting there could be a deal within days. I think a large part of the reason is that Hamas is more or less exhausted after 14 months or so of war in the Gaza Strip. It's been absolutely shattered militarily. So I think it's got to the stage where it feels like it should concede on some of its earlier demands and get a deal done. There is, I have to say, also pressure on Israel. There is a feeling within the country and beyond that Donald Trump wants this to be over by the time he comes to office on January the 20th, that he doesn't want to have to be dealing with war in Gaza in his early days when he returns to the White House. Plus, for Israel's sake, this war in Gaza is also a strain on the economy and causing social strains too. So from Israel's point of view, they would definitely welcome a ceasefire if it leads to the release of the 100 or so hostages.
Yeah, Israel has so much going on multiple fronts. Prime Minister Benjamin Netanyahu was actually in Syria yesterday, and he made some comments suggesting that the Israeli military will continue to occupy parts of Syria that it has recently moved into. What do you make of those comments, and do you get any sense of the reaction we may see from HTS around that?
Well, I think his comments in some ways confirm what a lot of people already thought was the case, that the Israeli Defense Forces would probably be in Syrian territory for a while. Those comments aren't likely to go down very well with HTS, the group that toppled Syrian President Bashar al-Assad and which now controls Damascus and most of the main Syrian cities. Its leader, Ahmed al-Shara, a few days ago, criticized Israeli strikes on the country, which dealt a huge blow to Syria's military capacity, and it's unlikely that either his group or other Syrian forces across the rest of the country are gonna welcome those comments, and they'll probably also be controversial in other parts of the world. Israel's main backer, the U.S. Under Joe Biden, is not criticizing Israel for this, and Donald Trump is unlikely to either. So that's something that is probably Netanyahu has in mind.
Right. Well, thanks so much. That's Bloomberg's Paul Wallace on all things Israel and Syria. And before we move on, I just also do want to note that we are seeing reports in Syrian media that HTS is moving to disband fighters that are in other factions in Syria. There's not a whole lot of detail about how HTS plans to do that, but it is an area to watch as we move ahead into the day. And also, we will be speaking with U.S. Secretary of State Antony Blinken about developments in the Middle East and Ukraine, as well as what foreign policy might look like in a second Trump administration. Catch the interview live on Thursday at the Times on your screen. And also coming up, no signs of overheating. Bank of America CEO Brian Moynihan is bullish on the U.S. economy. More from our interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. As investors await the Fed rate decision later today, Bank of America's CEO Brian Moynihan is warning that the U.S. economy may not need too much stimulus. Moynihan spoke with Bloomberg about where he's seeing signs of strength, including in the consumer sector. Take a listen.
If we were sitting here last year, our team, the research team, Candace's team, had a soft landing, no landing predicted. And a lot of people say, oh, that's very optimistic. And matter of fact, we went from that would have been like a 1% GDP growth rate this quarter, and we're going to have 2.5 or something like that. So we've moved up from abnormally, from positive but low to now higher than trend, higher than average. And so that means the economy is not having to balance anything. It's just going on this normal growth trend, which is good news. If you think about it becoming overheated, I think all the policies are yet to come in. There's enthusiasm and discussion, but everything's still out there until the policy gets enacted. Our team, when they look at tariffs, they say, well, if tariffs are offset by better regulation, they'll kind of even each other out. But even given their knowledge of President-elect Trump's policies, they are still predicting next year's a 2.5% GDP growth. They predict the Fed cuts rates a few times. If the inflation's moving down and we can grow this economy, that's actually not a bad place to be, honestly.
Does this economy need any fiscal stimulus at this point? And it looks right now like the so-called Trump tax cuts will get extended. And also, candidate Trump is talking about a lot more tax cuts. And given the fact that we're above a trend on growth and we're close to full employment, do we need any more stimulus?
I'm not sure you need more stimulus, just like we didn't need the stimulus probably in 21 because the pandemic goes through the system. But the question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are. And that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. And he's a markets-oriented person. He knows that if it gets too far out of line. We just ran, for the last fiscal year in the United States, an operating deficit of $1.8 trillion, which is equal to the entire GDP of the country of Australia. So we got to realize that the impact we have if we don't get this debt back in line. So I think everything on one side has to be governed with whether to do on the other side to offset it and whether it has that much effect. Right now, the economy is moving along. Consumers are spending. It's up for a 2-week period around the holiday, Thanksgiving holiday. It's up 5% over last year. That is good and solid. That is not overheated at all. But that came off the lows a little bit this summer, where I was a little nervous that they were going to let the consumer drift too far down. So between interest rates being cut a little bit, between the enthusiasm around the election, the markets being up, the consumers are spending more and telling us they're going to spend more for the holidays, which is good for the general economy. We got to keep them in the game not by overstimulating, by overdoing, by keeping the game just by getting a good core economy going with good deregulation activities, good tax policy, good immigration policy. These are hard things, but I think they're off working on it.
This is Horizons Middle East and Africa. Our top stories this morning. Taking on Toyota, Nissan shares soar on a report of merger talks with Honda, potentially creating a new Japanese car giant and a major player in the global EV race. Israeli officials say a ceasefire in Gaza is a more realistic prospect now than at any time in the past year. And Asian shares climb as traders brace for the Fed's final rate decision of the year. As a 25 basis points cut is widely expected, focus will be on the central bank's projections. Well, it's just gone 8:30 a.m. across the Emirates. I'm Christine Burke in Dubai, in for Jumana Bersechi. Well, here we are. The final Fed rate decision of the year comes a bit later today. Markets giving the green light to Jerome Powell to go ahead and deliver that 25 basis point cut to the market. But today, it is really not about the decision itself, but the kind of language and the tone that Jerome Powell uses about what comes next. Traders will be looking to answer questions around the trajectory for interest rates in 2025. We are due to get new dot plot projections for the first time since September. The last dot plot that we got showed that the Fed expected to cut rates 4 times in 2025. So some market participants out there are looking for some of those cuts to be taken off the table. Heading into all of that, here is where your markets are shaping up. So you can see we're not seeing very much action when it comes to the U.S. futures market. And same thing with the U.S. 10-year yield. We're hovering right around that 4.4% level for the 10-year. And additionally, the dollar, there you have it, unchanged. So that just goes to show that we really are in a wait-and-see holding pattern. One market that is moving a lot is Bitcoin. Losses of 2.3% this morning after we saw the cryptocurrency rally to above $108,000 for the very first time. Now let's talk about something that's non-Fed related for just a minute, and that is Apple, because we've seen the shares climb pretty steadily recently, and we saw the shares hit another record yesterday. And you can see that that has really taken the market cap of Apple steadily higher over the last couple of months. We're at about $3.8 trillion now. Wedbush Securities says that we could see that reach $4 trillion at some point soon, and that would make Apple the very first company that's ever reached that milestone. So something to keep an eye on for the tech space as you head into the new year. Well, let's check in on how markets in Asia are faring now. Avril Hong is standing by in our Singapore studio. So, Avril, what's going on over there in your part of the world as everyone is focused on what we are going to hear from the Fed today?
Yeah, I think that's really where the attention is, but we're also keeping an eye on some of these Japanese auto stocks, right? As there's been all this reports of a potential merger being explored by Nissan and Honda, and essentially this would mean industry consolidation, a way for the smaller rivals to kind of deal with the competition from Toyota, which is the big player in the space, whether you're talking about scale or capital expenditure. So I thought I'd just highlight what we're seeing in the stock market moves today. For example, with Mitsubishi, it could be part of the transaction. Reportedly, it already has a capital tie-up with Nissan, but Nissan is the one that is seen as benefiting potentially by the most because of scale of operations potentially, as well as cost competitiveness. Analysts have already pointed out for the likes of Honda, even though it might benefit, it might be to a limited extent. So we're seeing that reaction in the stock market as well. Overall, it is seen as a potential move that would help these players to compete not just against Toyota, but also some of its overseas rivals, including the China players. And of course, we've seen how they've been lagging in the EV space as well. So keeping an eye on Japanese transport stocks today. Christine?
Yeah, big story out of Asia there. Avril, thanks so much. That's Avril Hong in our Singapore studio. Well, the Fed is widely expected to make a quarter-point cut at its December meeting today as traders count down to a slew of other central bank decisions as well. Zeina Rizk, co-head of fixed income at Amwal Capital Partners, joins me now on set in our Dubai studio. So, Zeina, it's so good to see you. We talk so often on IB and over the phone, but here we are today for the first time on set. So thanks for joining us on such a big day. The Fed has a lot to consider. We got retail sales that came in hotter than expected yesterday, but industrial production disappointed a little bit. Inflation is proving sticky, but the economy is still strong. How does Jerome Powell weigh all of this up when he delivers his statement after the decision today?
Absolutely. So, Christine, it's so good to be here with you. As you said previously, the 25 basis point cuts, it's pretty much discounted. I also think that the Jan halt is largely discounted in the market, but as you mentioned, the focus is now on the tone. Is the tone going to be too hawkish or not? The base case is that because the pace is going to be slower, this is what the market thinks, because of the economic figures that come in very, very, not in a straight line. As you said, some good figures, some bad figures. So what I think is that the tone is going to still focus on the downward trend, on the inflation, and at the same time, the economy being strong. This being said, if the tone is too hawkish, we're going to have a flattening of the yield curve. So that's why we remain neutral on duration.
Yeah, and there really is a lot of uncertainty around the outlook for 2025. We had UBS's Wayne Gordon on earlier saying that he doesn't actually expect that we'll see any shift in the dot plot projections, that we will see a continuation of the expectation for 4 rate cuts in 2025. Absolutely. What do you think? Some out there are saying that we could see 2 rate cuts taken off the table.
Absolutely. There's a lot of uncertainty with regards to that because, at the end of the cycle, you always have uncertainty, and add to that a new presidency with the tariffs. Are those going to be only talks? Are those going to actually impact the market? So you have a lot of uncertainty on the table. Given that, the projection of how many rate cuts, I think, that the way we look at it or the way we position for it is remain neutral on duration until you get more clarity, or else you can be very wrong, and that could hurt your returns.
Yeah, and if we look back here to the region, talk about the GCC for a couple of minutes, You say that the fundamentals here are quite strong, and your research reports. Where do you see the biggest pockets of opportunity going into 2025, either from an asset class perspective or regionally, country by country?
From a fundamental perspective, we expect to see a twin surplus in all countries except for Saudi because, to fund the budget, which has a higher break-even oil. The opportunity here in the region, in my opinion, you have some pockets of high-yield positions that have good value. We see good value in Oman GREs also because we expect that those are going to follow on the upgrade. And for the time being, as I said, we're neutral on duration, but once we start extending duration, this is where we're going to be doing it, mainly in the project bonds in Abu Dhabi.
Okay. And if we can talk about Turkey, a lot of debate about central bank policy there as well. Inflation has come in a bit hot. We heard yesterday from the finance minister that the expectation is that annual inflation will slow to 45% in December. Do you see that happening? And do you believe that we will see a green light for the central bank to start cutting rates either this month or next month?
We know Turkey always wants to cut rate ASAP. But the difference now is that, yes, inflation has been going on a downward trend. The central bank had to revise higher its targets. So given that new target, yes, inflation is dropping. We think that they are going to have a rate cut in as early as December. But I don't think that it's going to be like it usually was, like huge rate cuts that will derail the market. It's largely discounted. They've gone a long way in terms of controlling inflation. And there's a risk that Q1 inflation might pick up again, but a small cut in December I don't think will have any negative impact on the market.
And what about Egypt? There's a lot of uncertainty around that market as well. We're waiting for an IMF review that early in December was supposed to come at any given day. We've seen weakness in the Egyptian pound. How are you positioning yourself in that market, and what are your expectations for monetary policy, for inflation, for the pound?
Absolutely.
You have the floor here.
For the weakness in the pound, the way I look at it is that we have uncertainty, but I don't think it's the IMF. I think the SLA will happen. Yes, it has been delayed a bit. It's going to happen if it's not in the coming 2 weeks, early next week. That wouldn't be my concern. They have done a lot of steps in terms of the fiscal reforms, we've seen a few headlines on the privatization last week. A lot of subsidies removal have happened. I think more are going to happen next year as the base effect kicks in for inflation not to be impacted negatively. But I think the main reason why we've seen, in addition to that, why we've seen weakness in the pound is because we've had a lot of maturities when it comes to local currency T-bills. So December was a record month with the equivalent of $15 billion if we want to do the FX there. So, and a lot of those did not roll over because of the uncertainty. Add to those uncertainty the geopolitical risk that is happening. So I think that markets are waiting to see more clarity going into next year to go back in the market. I also think that they will eventually be tapping the market early next year. So that's why I think as soon as we have less uncertainty with regards to Egypt, I think foreign investors will step in again and the currency will stabilize.
So for right now, it sounds like it's a pause on getting into Egypt and waiting for some of these uncertainties to iron themselves out.
Absolutely. And in the local currency, because of those uncertainty, you don't want to really be in the local currency in case something happens. And the dollar bond, those are tight. And those, now I don't think there's any upside at this point because everything is pretty discounted in the spreads. But I also don't see any downside minus any geopolitical risk. So the carry is good, but I don't see an upside for now.
All right. Well, thanks so much for weighing in on all that, from Turkey to Egypt and the Fed. You can do it all. So thanks so much for that. That's Zeina Rizk, co-head of fixed income at Amwal Capital Partners. Well, let's take a look at some of the other stories that we are following this morning. The Democratic Republic of Congo is suing Apple, accusing the company of using minerals pillaged from the Central African nation. Congo's lawyers have initiated criminal complaints against the tech giant subsidiaries in France and Belgium over the contamination of its supply chain with what Congo calls, quote, blood minerals. Apple says it strongly disputes those claims. Kenya is planning to use assisted reproduction techniques to save the northern white rhino from the brink of extinction. The Kenya Wildlife Service says it will develop embryos in a lab and use so-called stem cell-associated techniques with ancient material to help reproduce the rare mammals. Only 2 female white rhinos remain worldwide. Senegal is weighing approaching investors to extend debt maturities after a state audit showed public debt and deficit figures were larger than previously reported. Now the West African nation has $3.2 billion of bonds that are due in the next 10 years. And rescue workers are racing to save lives and repair the damage that has been wrought by Tropical Cyclone Chido and a string of islands across the southwestern Indian Ocean. Authorities in the French territory of Mayotte say the number of dead is likely to rise into the hundreds in the worst storm to hit the area in nearly a century. President Emmanuel Macron says he'll travel to Mayotte in coming days. And coming up, reaching toward the sky, shares in the UAE's biggest property company surged to their highest level in nearly 17 years. We will bring you that story next. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Shares in the UAE's biggest property company have surged to their highest level in nearly 17 years. Emaar Properties, the company that built the Burj Khalifa skyscraper, extended a rally after boosting dividend payouts. Bloomberg's Farah Al-Bahrawi, who leads our EMEA equities coverage, joins me now on set for more on this story. So, Farah, it's great to see you this morning. We were just chatting about how strong of a performance Dubai equities have had this year. We're looking at 25% gains. Tell us more about this week's action with Emaar and the dividend that drove those increases.
Absolutely. So, Christine, this was clearly a very big surprise for investors to the upside. The shares of the company rallied 15%, the maximum allowed for 2 days. And not only did it just boost Emaar, it boosted the whole index. We had Emirates NBD, the biggest lender in the city, rallying to a record high amid optimism just generally about the city and the economy. So to answer your question about Dubai's gains, yes, the index is up 25%, massively outperforming emerging markets and massively outperforming regional benchmarks here. Saudi Arabia is flat on the year. And if you're here in Dubai, you just look out and you see how crowded it is. A lot of tourists, a lot of people just moving into the city, and investors are trying to play that. You have Emaar and its unit, Emaar Development, leading the rally in Dubai this year. Real estate continues to be a very big story for the city. Obviously, we have a lot of IPOs, the exchange is diversifying in terms of the companies, but still, real estate, the boom there continues to be a key driver.
Yeah, when we talk about Saudi, you mentioned that the benchmark there, it's actually down just a fraction of a hair on the year, but still it's down even though we've seen a lot of IPO activity this year, and there's no signs of that letting up. We've had news that 3 different companies are also planning IPOs over the last couple of days. What do we know about the IPO market there?
Absolutely. So let's just quickly talk about those 3 companies. You have Saudi Global Ports, that's a government-backed company. Bloomberg has reported that they have seek 2 banks to arrange the listing, Goldman Sachs and HSBC Holding. We reported also that this could come as early as next year, potentially raising $1 billion. So definitely not a small company coming to the market. But that, again, kind of asks the question, what is the liquidity looking like in Saudi Arabia? We've already seen that weighing on the market earlier this year. And with a big IPO like that one and the other 2, such as Almoosa, that's in the healthcare space, got $46 billion of orders for its $450 million listing. We are used to these high levels of oversubscriptions, but recently in the Gulf, that's not translated into very big share price pops in the first days of trading. And finally, we have Nice One, a cosmetics retailer, pricing at the top end of the range. And now we're just waiting for the debut of that one.
Yeah, and if we consider the divergence between the UAE and Saudi, but then we also consider that Saudi has seen so much IPO activity, when does that activity translate into potential gains for the Saudi market? And do you see that the gap between performance in the 2 will continue next year?
Well, again, it goes back to liquidity. It goes back to how successful Saudi is in bringing foreign investors that are not just passively tracking Saudi performance, but also actually actively investing in the market, understanding the Saudi story, and seeking out the beneficiaries of government initiatives such as Vision 2030, and how much of that actually translates into immediate economic boom and essentially profits, which is in the end the key driver of the stock market there.
Yeah. All right, Farah, well, thanks so much for joining us and for weighing in on all that. Let's see if Emaar will give us another 15% gain today or not. Well, that's Bloomberg's Farah Al-Farawi, and thank you so much. In European banking news now, Crédit Agricole has appointed Olivier Gavalda as its new CEO, taking over from next May. The lender has been responding to a string of potential deals in Italy, set to reshape its biggest market outside of France. Meanwhile, Crédit Ag is among 7 French lenders downgraded by Moody's amid the country's political turmoil. Moody's says French public finances will be substantially weakened over the coming years, with political fragmentation impeding meaningful fiscal consolidation. The U.S. is said to be gearing up to initiate a trade investigation into Chinese semiconductors in the coming days. Bloomberg has learned the review could result in tariffs or other measures to restrict imports of older model chips and products that contain them, such as cars and also smartphones. Now, this investigation could take months to conclude, with any reaction left to Donald Trump's incoming administration. Luigi Mangione has been indicted in New York on first-degree murder charges for the shooting of United Health Group executive Brian Thompson. Prosecutors elevated the case to first-degree murder, a charge reserved for the most abhorrent conduct, such as killing a police officer or for terrorism. Prosecutors say there are indications that Mangione may now drop his objection to extradition from Pennsylvania. He faces life in prison without parole if convicted. And coming up, more than 90% of Nigeria's currency sits outside of banks as mobile money agents now handle most daily transactions. We'll learn about this thriving industry and why regulators are trying to crack down on it next. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. BHP CEO Mike Henry says the mining industry is bracing for the unexpected as President-elect Donald Trump returns to office. Speaking on the sidelines of the Conference de Paris, Henry gave us his view of the potential impact.
For our industry, over the long term, we expect growing demand for key commodities to continue unabated. However, in the near term or along that path, there is going to be a degree of uncertainty related to trade flows, tariffs, industrial policy, and so on, which are something that we keep a very close eye on. Specifically in respect of the incoming administration, we know that there's strong support for mining, strong understanding of the need for security of critical mineral supply chains. Exactly how that plays out in practice and policy, yet to be determined. There has been bipartisan support in the U.S. for more mining in the U.S., permitting reform, and we expect that to continue and to be a strong area of focus for the new administration.
But does that change actually the way you'll run BHP?
So BHP's strategy is one that is very long-term, focused on the global level. The U.S. isn't currently a big market for BHP. It's about 3%, 4% of our revenues. But of course, the U.S. plays a key role in determining policies that apply to the industry globally. So it's something that we stay very close to. Our strategy is one of positioning ourselves in the right commodities, large assets that we can expand over time, specific focus on copper, potash. We've got a big development underway in Canada. Iron ore, we have the world's lowest cost, best performing iron ore business, and in a subset of only the best quality coals for steel making. The other thing I would note is that BHP's production is almost exclusively from countries that have free trade agreements in place with the U.S. currently: Australia, Chile, and Canada.
What does a Trump presidency mean for the energy transition? Does it actually slow it down? And so does it mean that everything is a little bit slower, even access to these critical minerals, that you have a bit more time? So
it's a really interesting question, and I don't think this applies just to the U.S. If you look at governments around the world these days, they're facing competing pressures. I think there's a broad understanding of the need for the long-term need for the energy transition, but at the same time, policymakers are needing to deal with cost of living pressures, resurgence of industrial policy, trade protectionism, all of these factors coming to bear, and how governments then weigh up and balance between those factors in the short term, of course, is a key consideration, but I don't think it detracts from the long-term trajectory of the world achieving the energy transition.
BHP CEO Mike Henry speaking with our colleague Francine Lacroix. Well, the big story as we head into the bottom of the hour here, head into the next hour of Horizons Middle East and Africa, of course, is the Fed, but also we have the consideration of that mega merger in the auto space in Japan with Honda and Nissan considering a potential tie-up. Honda considering several options, including a merger, a possible capital tie-up, or the establishment of a holding company. We are hearing that we could see the companies make some kind of announcement on December 23rd, and that this could also include something with Mitsubishi. So you can see there Honda shares down, Nissan up, Mitsubishi and Toyota both also gaining. Now, when we consider where markets are heading into today, we're really in a holding pattern ahead of the Fed. You can see that there on your markets board. And that is it for the first hour of Horizons Middle East and Africa. I'm Christine Berg in Dubai. Stay with us for the second hour with Jennifer Zabazaja in Johannesburg. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Taking on Toyota, Nissan shares soar on a report of merger talks with Honda, potentially creating a new Japanese car giant and major player in the global EV race. Israeli officials say a ceasefire in Gaza is a more realistic prospect now than at any time in the past year. And Asian shares climb as traders brace for the Fed's final rate decision of the year. As a 25 basis point cut is widely expected, focus will be on the central bank's projections. Good morning. It is just gone 9 a.m. across the Emirates, 7 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizons Middle East and Africa. And of course, as we've been telling you all week, it is the Federal Reserve's last decision day for 2024. We were just mentioning there, it is widely expected that we will see a 25 basis point cut. Traders actually pricing in that expectation at about 95% right now. Uncertain, though, is the path ahead, right? And we continue to talk about what the Fed's revised dot plot will show. We did get the last dot plot in September, and we showed that we would get one cut in December, one more cut in December, 4 more cuts in 2025 and 2 more cuts in 2026. The question, though, now is how will a resilient consumer in the U.S., a strong economy, and, of course, Trump's proposed tariffs affect what the outlook is. But for your market checks right now, let's take a look at U.S. equity futures right now, turning ever so slightly higher, as you can see right there. We have both S&P and NASDAQ futures marginally up, that coming after a small sell-off that we saw on Tuesday. Traders were also weighing stronger than expected retail sales data in the U.S., again, further highlighting the strength of the consumer. We have the 10-year yield also firmer right now at about 4.39%. And the greenback a little bit weaker, but pairing earlier marginal gains and looking a little bit mixed, of course, given that U.S. retail sales data. I'm also paying very close attention to what we are seeing in emerging market stocks and currencies as we await the Federal Reserve interest rate decision. If you take a look at year to date, it's been a bit of a bumpy path. But on Tuesday, we saw mostly EM stocks and currencies down, with actually the South African rand the worst performer among developing currencies. We're also seeing a gauge of developing world equities headed for its third day of losses. That was on Tuesday, the worst streak in a month, but marginally up right now as we await for the Fed decision. We will see what happens next when we get that decision. Now, let's check in, though, on how markets in Asia are faring at this moment. Avril Hong is back and standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, we're seeing Asia stock gauge nudging slightly higher, but this is after 3 sessions of declines. It's really the focus on the Federal Reserve's dots, as well as a summary of economic projections. Don't forget, we also have a BOJ decision. And overall, the messaging recently suggests this is a central bank that is not in a rush to hike, and there's no move expected by markets tomorrow. They're even not certain whether we're going to see one in January. We are seeing a bit of firming in the yen, that being said. We are keeping a close watch as well on the Japanese auto stocks. Nissan reportedly considering this tie-up or potential merger with Honda. There's something that could provide short-term financial relief for an automaker that's really been struggling given slumping sales in the US, in China, that's really hit its profits, and that is also seen as potentially positive for the auto industry in Japan as a whole. So we're keeping a close watch on transport stocks in Japan in general as well. Jen?
Thanks so much, April Hong. We'll check back in with you in just a few. Let's turn to the Middle East, though. Israeli officials say a ceasefire in Gaza is a more realistic prospect now than at any time in the past year. Bloomberg has learned a working group from Israel is in Doha this week to reestablish relations with mediators in the event of a breakthrough in negotiations with Hamas. Defense Minister Israel Katz said on Monday a truce is closer than ever, while Foreign Minister Gideon Saar also told hostage families he's more upbeat than a month ago. For more on this, let's bring in Bloomberg's Dan Williams, joining us now from Jerusalem. So, Dan, what do we know about what is being discussed, and is the expectation that we will actually see a deal this time around?
Indeed, there has been a surge of optimistic messaging, pretty much only by the Israeli side so far, but not necessarily denied by the Americans, by Hamas, by Qatar or Egypt, the mediating countries in these talks, indicating that something could be looming, a breakthrough could be coming up. The details have been sketchy as well. It would appear that this deal, if it happens, would hew largely to the framework of what President Biden proposed more than half a year ago, with the exception that Hamas would relent on two key points that had held up previous negotiations, one being for an explicit Israeli commitment that a truce in Gaza would effectively become an end to Israel's war against Hamas, and secondly, that Israel undertake to withdraw all forces from the entirety of the Gaza Strip. So if that proves true, it would appear that we are on the way to a hostage deal, to a truce that may de facto, if not in an official declared way, spell the end of this war after almost 15 months.
And Dan, happening at the same time, we're also hearing from Benjamin Netanyahu, Israel's prime minister, saying potentially we'll see Israeli troops occupying a buffer zone inside of Syria. If we're talking about this war potentially being put to the side, what does this mean now for what is happening in Syria and Israel now potentially occupying a part of the country?
Indeed, there's been a subtle shift of nomenclature and messaging from Israel about what it plans to do in a buffer zone east of the Golan Heights, into which it sent troops and tanks soon after the fall of President Assad in Damascus, his fall at the hands of that pretty astounding rebel takeover of the country. Now, originally, Israeli officials would refer to the Syrian side, or the Syrian-held side of the dominating Hermon mountain as the Syrian Hermon. And in a statement yesterday, Netanyahu called it the Hermon Peak, the Hermon Ridge. It would appear that the Israelis are now quietly airbrushing the term Syrian out of there to signal that they're there to stay. This would have been the second visit by the Prime Minister to that strategic site in the space of a week, in itself significant. Now, he also said that Israel would be there for the foreseeable future until a workable arrangement, an alternative to the 50-year-old disengagement agreement with Syria, obviously enforced by the now gone Assad family, is found. Previously, Israel talked about being there for months. It would appear the Israelis are there to stay for the foreseeable future. They say this is a temporary security measure, given the prospects of a jihadi-rooted rebel leadership coming up in Syria that could threaten Israel's security. They simply want strategic depth to be able to see an incursion coming from a long way away and prevent a repeat of the October 7th attack from the Gaza Strip.
Dan, you mentioned the rebel group HTS. Have we heard any reaction from them at this point, or any other international players to this potential proposal?
I'm sorry, the proposal by HTS for?
No, from what we've heard from Netanyahu about occupying a buffer zone, have we heard anything from international players or HTS on this potential moving in of Israeli troops?
Yes, well, HTS, the presumed leadership of the interim Syrian government, or the future Syrian government, has said in fairly veiled terms that it opposes the occupation of Syrian land, that Israel has no reason to be there now that Assad has fallen. So they've signaled that there's no threat. Israel is not taking that at face value. Some players in the Middle East, Arab countries, have accused Israel of basically expanding its hold on Syrian land, having annexed the Golan Heights, which it captured from Syria in the 1967 war. Again, Israel is not really listening to that. Israel's attitude since the October 7th attacks by Hamas in Gaza, which really blindsided it, is that it will look out exclusively for its own security, and it really wants, as I said, strategic depth, a way of protecting its borders.
All right, we'll leave it there. Bloomberg's Dan Williams in Jerusalem with the latest for us. Dan, always great to get your reporting on. Thanks so much. And we should note we'll be speaking with U.S. Secretary of State Antony Blinken about developments in the Middle East and Ukraine, as well as what foreign policy might look like in a second Trump administration. Catch the interview live on Thursday at the Times on your screen there. And coming up, shares of Nissan surging on news the car maker is exploring a possible tie-up with Honda. Details of the possible mega merger next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasacha in Johannesburg. Honda and Nissan are preparing to start negotiations on a possible merger, which ultimately could be expanded to include Mitsubishi Motors. For more, let's bring in transport reporter Nicholas Takahashi, who's been covering this for most of the day there. So, Nicholas, talk to us about the implications for Japan's car industry. Earlier, we were speaking with Avro Hong, who said potentially this could be a boon for the country. What's your take?
Well, depending on how this situation fleshes out, this could be a real threshold moment for the Japanese car industry. What we're talking about is a potential tie-up between Honda and Nissan and maybe even Mitsubishi. And that sort of three-way alliance would naturally pit itself against Toyota and the partnership that company has with Mazda, Subaru, and Suzuki. So effectively, we would see the country's auto industry split itself in half, not just to compete with each other, but to share resources, pool output capacity, and compete better on hybrid cars in North America and with EV brands in China.
Who stands to gain more from this, Nicholas? Is it Nissan, Honda, Mitsubishi? And where do you see this benefiting the most if this plays out the way that authorities are potentially suggesting?
I'd say that's the big question we're all trying to answer right now. For Nissan, the benefits seem a little more self-evident. I think a lot of folks will know that last month Nissan reported cratering profits that forced it to cut thousands of jobs, lower production capacity, and slash its annual profit outlook for the fiscal year by 70%. So things aren't looking good for Nissan. This tie-up could help it stem the bleeding. For Honda, on the other hand, the car maker has been looking to scale production abroad so that it can better compete with Toyota and legacy brands in the U.S. and EV brands in China. With Nissan woes still to be resolved with a leadership shakeup just in the last couple of weeks, it still stands unknown whether Honda will see those benefits immediately.
Right, and we'll wait to see how the shares continue to react. We'll leave it there. Transport reporter Nicholas Takahashi. Thanks so much, Nicholas. Let's pivot back to our top story, and that is the Fed, which is widely expected to cut by 25 basis points today. Joining us now is head of Equity Strategy CIO Office at Emirates NBD, Anita Krishna Gupta, who is joining us. Anita, we've mentioned that largely expected 25 basis point cut today. The outlook, though, is really what is key. What is your focus when you think about the monetary policy trajectory and what it looks like in 2025?
Good morning, Jennifer. We also expect the 25 basis cut in line with what consensus feels. What we are waiting to see is what the Fed says, how they're going to change the dot plot, how they're going to change economic projections. We think they're a little bit, behind in terms of what the projections are right now. So it's going to be very interesting as to the language, as to what Chair Powell says. Is it going to be less of a hawkish stance? We still have a bit of sticky inflation. Outlook for equities remains pretty positive because we are on a rate cutting cycle, and that's definitely going to be positive for corporate profits.
Anita, you said the Fed is behind in terms of what the projections are, but how does the Fed actually set out that dot plot without knowing really what's to come from a Trump 2.0? What are the projections telling you?
The way we are looking at the projections is that possibly a little bit of a higher GDP growth rate for the US for sure. We've got also consumptions that's been very strong. We've got retail sales that were a little bit higher than expected at 0.7% year on year. So in every way possible, the economy stays strong. Also, you've got to factor in President-elect Trump's policies. Now, whether the Fed will do that, we don't know. But what we can very pragmatically say is that it's a question of tariffs versus tax cuts, how the Fed looks at the economy. Let's hear what they have to say.
You mentioned U.S. equities. You believe that they'll continue to climb up. How much further do they have to go? Potentially, will we see a pullback at some point?
We've just done our year-end fair values for 2025, and we are expecting mid-single-digit returns, a little bit, between the 5 and 10%. So what we are looking at is a higher PE multiple. We don't see any kind of a valuation pullback. We're expecting earnings growth around 12%, a little bit below consensus, which is higher. What's going to take equities further up is still definitely the AI story. We don't see AI stocks pulling back and the rest of the market going up. What we see is a broadening out of the market. Currently, only 45% of the S&P 500 is trading above the 50-day moving average. That's a bit of a worry, but the AI story is not going away. It's just that it's going to deaccelerate. You're not going to see that heavy, currently over 70% gains from the Mag 7. I think if you reasonably expect even a 20% gain, and a broadening of the tech story already seen with what's happening with Broadcom, other semis, other AI adopters. That's what we're expecting will continue to take the market up.
Anita, outside of the U.S., I want to talk about Europe. Are you potentially confident to dip your toe into equity markets in Europe, or do you still need to see more and perhaps let some of the uncertainty subside before you feel ready?
Europe economic growth continues to disappoint. They are definitely ahead in terms of rate cuts. They have lower rate from the ECB at around 3%. Now, that should be benefiting corporate profits, but we're not seeing demand tick up in Europe. We're seeing very strong demand still in the US. So it's a case of relative preference for the US as consumption in the US continues to stay strong. The European indices are made up largely of a combination of banks, luxury, autos, and consumer. We definitely like within the European space, healthcare, obesity winners, some of the consumer stocks, which have been very good quality picks. In terms of auto, we would not be putting any bets there. In terms of technology, no. Luxury is a mixed bag. You have some better companies and some which have kind of struggled this year based on lower China demand. So overall, Europe, we stay underweight going into 2025.
Let's finish on China. Is the risk reward worth it for you and your team?
China is a story which has been up and down the whole year. We've seen consumption focus from the government. That continues to be the case, but we have not seen consumption pick up to the extent that would warrant an overweight on the market. We stay neutral. We find it very difficult to predicate which month we're going to see a 10 or a 15% return on China. Valuations are very attractive. A lot about China remains attractive, and the government is very serious on the stimulus measures to boost consumption. So we would stay neutral at this point. We do expect more measures from the government. So we would say stay invested in China, and we are definitely seeing green shoots out there.
All right, sticking it out in China. We'll leave it there. Anita Krishna Gupta, head of Equity Strategy CIO Office at Emirates NBD. Anita, always great to get you on. Thanks for joining us. Now coming up, no signs of overheating. Bank of America CEO Brian Moynihan is bullish on the U.S. economy. More from our interview with him next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. In European banking news, Credit Agricole has appointed Olivier Gavalda as its new CEO, taking over from next May. The lender has been responding to a string of potential deals in Italy, set to reshape its biggest market outside of France. Meanwhile, Credit AG is among 7 French lenders downgraded by Moody's amid the country's political turmoil. Moody's says French public finances will be substantially weakened over the coming years, with political fragmentation impeding meaningful fiscal consolidation. And as investors await the Fed rate decision in the U.S., Bank of America CEO Brian Moynihan is warning that the U.S. economy may not need too much stimulus. Moynihan spoke with Bloomberg about where he's seeing signs of strength, including in the consumer sector.
If we were sitting here last year, our team, the research team, Candace's team, had a soft landing, no landing predicted. And a lot of people say, oh, that's very optimistic. And matter of fact, we went from that would have been like a 1% GDP growth rate this quarter, and we're going to have 2.5 or something like that. So we've moved up from abnormally, from positive but low to now higher than trend, higher than average. And so that means the economy is not having a bounce anything. It's just going on this normal growth trend, which is good news. If you think about it becoming overheated, I think all the policies are yet to come in. There's enthusiasm and discussion, but everything's still out there until the policies get enacted. Our team, when they look at tariffs, they say, well, if tariffs are offset by better regulation, they'll kind of even each other out. But even given their knowledge of President-elect Trump's policies, they are still predicting next year's a 2.5% GDP growth. They predict the Fed cuts rates a few times. If the inflation's moving down and we can grow this economy, that's actually not a bad place to be, honestly.
Does this economy need any fiscal stimulus at this point? And it looks right now like the so-called Trump tax cuts will get extended. And also, candidate Trump is talking about a lot more tax cuts. And given the fact that we're above a trend on growth and we're close to full employment, do we need any more stimulus?
I'm not sure you need more stimulus, just like we didn't need the stimulus probably in 21 because the pandemic goes through the system. But the question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are. And that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. And he's a markets-oriented person. He knows that if it gets too far out of line. We just ran, for the last fiscal year in the United States, an operating deficit of $1.8 trillion, which is equal to the entire GDP of the country of Australia. So we got to realize that the impact we have if we don't get this debt back in line. So I think everything on one side has to be governed with whether to do on the other side to offset it and whether it has that much effect. Right now, the economy is moving along. Consumers are spending. It's up for a 2-week period around the holiday, Thanksgiving holiday. It's up 5% over last year. That is good and solid. That is not overheated at all. But that came off the lows a little bit this summer, where I was a little nervous that they were going to let the consumer drift too far down. So between interest rates being cut a little bit, between the enthusiasm around the election, the markets being up, the consumers are spending more and telling us they're going to spend more for the holidays, which is good for the general economy. We got to keep them in the game not by overstimulating, by overdoing, by keeping the game just by getting a good core economy going with good deregulation activities, good tax policy, good immigration policy. These are hard things, but I think they're off working on it.
This is Horizons Middle East and Africa. Our top stories this morning. Taking on Toyota, Nissan shares soar on a report of merger talks with Honda, potentially creating a new Japanese car giant and major player in the global EV race. Israeli officials say a ceasefire in Gaza is a more realistic prospect now than at any time in the past year. And Asian shares climb as traders brace for the Fed's final rate decision of the year. As a 25 basis point cut is widely expected, focus will be on the central bank's projections. But for now, good morning. It has just gone 9:30 a.m. across the Emirates, 7:30 a.m. here in South Africa. I am Jennifer Zapasaja in Johannesburg. Welcome to Horizons Middle East and Africa. And of course, the last decision day for the Fed in 2024, as we mentioned, is coming later today on Wednesday. We mentioned about 90% chance that we will see a 25 basis point cut. But really the question is, what will the dot plot show? What is the outlook, especially if you consider potentially what will come from a Trump 2.0 tariffs and also a stronger U.S. economy. But if we take a look at where U.S. equity futures are right now, they're trending marginally up right now. We can see S&P and NASDAQ futures up ever so slightly right now. And that is coming after we did see a bit of a down day on Tuesday, a bit of a sell-off for U.S. equities. We're also seeing traders weighing a number of data points, including stronger than expected retail sales data that we got from the U.S., highlighting the strength of the consumer. The 10-year yield right now the yield down just about 1 basis point, at 4.38%. And that is significant, of course, as we get into the Fed decision. And we're also looking at the Bloomberg dollar unchanged right now. But of course, we're paying attention to what happens with that press conference later today. I'm also watching closely what is happening to emerging markets. On Tuesday, we did see emerging market stocks and currency with a bit of downside, just awaiting the Federal Reserve interest rate decision right now. We are seeing a bit of upside, but on Tuesday, the South African rand was one of the worst performers in developing market currencies. Again, we will wait to see how the trajectory pans out for EM when we do get that decision from Jerome Powell later. Anyway, let's check in on how the yen is doing ahead of the BOJ decision tomorrow. That's also a big central bank decision we're waiting for. Avril Hong is standing by with that news in our Singapore studio. Avril, how's it going?
Yeah, Jen, we're seeing a lot of volatility being expected by markets. I mean, you know how dollar yen was actually below 150 at the start of the month. And at one point, markets were pricing in a 2/3 chance that the BOJ was going to hike tomorrow. Now that's gone down to 15%. And overall, it seems like a central bank that is in no rush to hike. Among the uncertainties for it include, Trump and his policies next year. So it does look like a central bank that's kind of keeping options open, but no clarity to markets. Markets aren't even sure that we could see a hike in January next month. So against that backdrop, what we're seeing is the jump in dollar yen overnight implied volatility because, of course, markets pricing in potentially what we could get from the Fed as well, not just about the BOJ. And this suggests a trading range of between 152.2 to about 154.6, a wide gap. So a lot of uncertainty, I think, in markets ahead of the BOJ and the Fed. Jen?
That's right. Thanks so much, Avril Hong in Singapore. Let's pivot back to the Africa region now, to Nigeria, where more than 90% of the currency in circulation now sits outside of banks, with mobile money agents actually handling most daily transactions. They provide a valuable service for many people, but regulators fear they're starving the formal banking system of cash and also undermining the fight against inflation. For more, let's go to Bloomberg's Emele Ono, who is in Lagos and did report on this story for Bloomberg. Emele, thanks so much for joining us. Talk to us about these money agents and why authorities are seeing them as a challenge to the established payment system that they're trying to strengthen?
Yeah, thank you, Jennifer. It's actually a challenge in the sense that Central Bank actually wanted POS operators to grow for the purpose of financial inclusion. But what we see is a case of outcome different from the objectives. So rather than POS operators deepening financial inclusion, so they now became cash merchants in the sense that instead of looking for people getting to the unbanked to bring them into the formal banking system, they now decided to be selling cash. And cash is not supposed to be sold. When you work, you earn cash. You are not supposed to buy it again. So what we see is that the POS operators go to the banks and mop up the cash. When they mop up the cash, they then go and sell it. Sometimes they sell it as much as getting a returns of up to 10-20%. So which is unacceptable to the public, also unacceptable to the central bank. So it's a case of doing the business such that they sell cash rather than assisting people to open accounts, assisting people to deposit money in the banks, assisting people to do money transfer. So that is the challenge we are facing. So we have cash scarcity as against the people to bring more people into the financial system.
So Emele, what can the central bank do about this to ensure that there is cash for residents, especially if you consider 90% is outside of the central bank's control at this point? What are they looking to?
What central bank wants to do is to make sure that these operators actually do what they are supposed to do. They have a responsibility. They are not supposed to have POS where there is a bank ATM. You are an agent, because they are mainly agents of banks. They are supposed to be at a distance, some kilometers away from the banks, so that those people, instead of somebody coming all the way, spending a lot of money, commuting some kilometers to the bank to take cash, they could get small cash from the POS operators. So that is the essence. So what central bank is trying to do now is to make sure that rather than all cash being with the POS, that this cash is retained with the central bank, as it is retained with the commercial banks rather. And central bank has given instruction to the commercial banks to make sure that they dispense cash through their ATMs rather than getting them across to the POS operators. As a matter of fact, there is even, central bank is even trying to kind of send out its staff to go to the street and monitor and also inspect the banks to make sure that these regulations are complied with.
Right. It's a fascinating story. It is available now on the Bloomberg. Emele Onu in Lagos. Emele, thanks so much for your reporting and for joining us this morning. Let's stick with the Nigerian economy, though, and speak with Matilda Adefalujo, the investment research analyst at Meristem Nigeria. Matilda, thank you so much for joining us. There's a lot happening in Nigeria right now. I want to start with the inflation print we got just a few days ago. It is rising for the third straight month, and it's at a high of 34.6%. We heard Bloomberg Economics, they revised their forecast to say that inflation is going to peak in December versus November. What is your projection?
Well, I mean, let's start from the November figures that we got. 34.60 is exactly in line with what we projected in Meristem. And I would say that let's even speak to the drivers. What is driving inflation? We have high fuel prices, we have exchange rates, we have even excess money supply, just as Emily mentioned. Then there is also, the general cost of logistics, distribution. So it's expected that, towards the end of the year, we'll still see the impact of festivities, would continue to impact inflationary pressures. So inflation is expected to still increase in the month of December. However, for the month of January, that's next year, and February, we'll likely see slight moderations, and that would be based on, when you consider base effect, the base year effect. So, quick backstory: early this year, that's in January and February, we saw that the food index rose to was very, very high, and also the naira also weakened. It fell to as low as 1,910 naira per dollar. So we don't expect that the naira is continued to express as much volatility. So yeah, in December, it's expected that inflation will continue to tick upwards, but from January into February, we'll see slight moderations.
What does that mean for the CBN, Matilda? Many people have said potentially the hawkish stance by Governor Cardoso, it could restrict any sort of growth that we get in a number of the key sectors for the economy. Do you think they should remain hawkish, though?
Well, when you consider the mandate of the central bank, monetary authorities, so we have the monetary authorities and we also have the fiscal authorities, and they have different mandates, they have different objectives. And the governor of the central bank has always mentioned, has always emphasized their focus on achieving price stability. So as long as inflation remains stubborn and there are still challenges that can be solved with tweaking the interest rate here and there, I believe that they would maintain their hawkish stance. However, it would not be as aggressive as we saw earlier in the year when we saw, the initial 400 basis point hike, then 150, then 150. So I expect that, the aggressiveness would be, moderated, but they've already stated that as long as is needed and as is required of them, there would continue to be they would maintain an hawkish stance. Mm-hmm.
What would be the catalyst, though, to moderate that hawkish stance? What's your expectation for inflation? When will it actually start to come down substantially?
Well, so one of the things that we've always clamored for, that we've always, mentioned, is that there should be fiscal measures complementing what the monetary authorities are currently doing. So it's always said, I like to say that the monetary policy, different things that they implement is like when you apply first aid to someone that needs immediate help of the doctor. So the first aid is just to maintain and sustain the person until you're able to get them to the hospital. So until we're able to get structural issues corrected, until we're able to get insecurity out of the way, until we're able to have better road transport networks, until we're able to have less issues with farmers going to their farmlands, those are things that affect supply. So if we do not improve supply, then I'm sorry, things would continue to continue the way they currently are, right? So it's about addressing supply issues, and that's where we have infrastructural deficit and all of the different other factors that I've mentioned. So just like in economics, there is the interplay of supply and demand. When demand continues to outpace supply, and supply is either stagnant, constant where it is, or even declining, then there's definitely going to be an increase in price. So as long as we do not, address issues that concern supply, in terms of even the exchange rates, ensuring that there is better inflow of FX into the economy. Yeah. So if that is not addressed, we'll continue to see inflation, trending upward.
Matilda, really quick, we will get the budget from the president later today. You mentioned insecurity needs to come down. Nigeria still has 30% of its revenue going to servicing debt. How much more can he actually do?
Well, I don't think there is any country that doesn't have debt. But what is important is that while you're raising debts, you're spending on things that are capital generating, so that we have the capital expenditures and recurrent expenditures. And one of the problems that we have in Nigeria is a lot of the budget spending goes more into recurrent spending, which feeds into higher money supply, right? But then when we spend more on capital investments, things that bring returns or can be used to generate more income, then we'll see better use of funds. Yeah.
All right, we have to leave it there. Thanks so much, Matilda Adefalujo, Investment Research Analyst at Meristem in Nigeria. Appreciate your insights this morning. Now let's take a look at some of the other stories we are following. The Democratic Republic of Congo is suing Apple, accusing the company of using minerals from the Central African nation. Congo's lawyers have initiated criminal complaints against the tech giant's subsidiaries in France and Belgium over the contamination of its supply chain with what Congo calls, quote, blood minerals. Apple says it strongly disputes the claims. Rescue workers are racing to save lives and repair the damage wrought by Tropical Cyclone Chidu and a string of islands across the southwestern Indian Ocean. Authorities in the French territory of Mayotte say the number of dead is likely to rise into the hundreds in the worst storm to hit the area in nearly a century. President Emmanuel Macron says he'll travel to the region in the coming days. Kenya is planning to use assisted reproduction techniques to save the northern white rhino from the brink of extinction. The Kenya Wildlife Service says it will develop embryos in a lab and use so-called stem cell-associated techniques with ancient material to help reproduce the rare mammals. Only 2 female white rhinos remain worldwide. Now, coming up, a Saudi healthcare provider becomes the latest Middle Eastern listing to garner triple-digit levels of oversubscription. We'll discuss demand versus performance next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Saudi Arabia healthcare provider Almoosa has drawn $56 billion worth of orders from institutional investors for its IPO. It's the latest Middle Eastern listing to garner triple-digit levels of oversubscription. Although of late, this has not necessarily translated into strong trading performance. Let's bring in Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Market reporter. Laura, thanks so much for joining us. So investor demand for both Almoosa and another company, Nice One, seems strong, but it's not comparable to what we've seen from the Saudi IPO market. Talk to us about how this is setting up the region and what we're seeing in terms of performance in the region.
Yeah, absolutely. So recently we've seen a couple of large IPOs in the region that haven't performed well despite garnering strong levels of oversubscription. I'm talking about Talabat and Lulu Retail, and we've seen this trend develop in the region more broadly. But the truth is that Saudi companies seem to be bucking this trend, and more recently we've seen IPOs from a human resources company, Tamkeen, and another company in the financial services space, United International Holding, that garnered these levels of oversubscription and actually reached the 30% limit on the first trading day. So Saudi companies do seem to be bucking this trend. So we'll see with Nice One and with Almoosa. Obviously, the true test will come on listing day. But the truth is that companies in the kingdom have been performing well.
Is the expectation that will continue into next year, Laura?
Yeah, so look, for next year, there's definitely a pipeline across the region, but specifically in Saudi, we're expecting a number of IPOs, I guess, from 2 main groups. On the one hand, we've got the PIF, the Sovereign Wealth Fund, which is expected to continue to list a lot of its assets. So on our side, we've reported about NUPCO, the healthcare procurement company. They have banks for that and are planning to list it. And more recently, we've reported about Saudi Global ports hiring banks for a listing as early as next year. And on the other hand, we're also expecting a number of private sector companies, such as Almoosa, Nice One, which is an online cosmetics retailer, rather. So we'll see a number of these private sector deals continue into the new year, including companies like Ajara, which is a financial services firm, which has hired banks, and possibly Tabi, which is a buy now, pay later company. So yeah, there's definitely a pipeline for Saudi next year.
Fascinating. We'll wait to see how they perform next year. Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Market Reporter, joining us in Dubai there. Now, cocoa futures hit a fresh record as the market grapples with renewed supply concerns. We get the latest next. This is Bloomberg. Cocoa prices have almost tripled this year as the market grapples with renewed supply concerns, with the high costs already plaguing chocolatiers and consumers. For more, let's go to Bloomberg's Mumbi Gatau, who follows this very closely. So, Mumbi, what is fueling this fresh rally after the pause and cooling we saw mid this year that you've been following very closely?
Yes, as we discussed earlier this year, we had that historic rally to $12,000 a ton, but now that cooled in the course of the year, and we saw prices come down to around $6,000 a ton. Now that was a brief pause because people are already looking forward to this harvest that started in October, and everyone thought that it would be a bumper crop. Now those hopes are being dimmed because when they look at the crop, they're thinking the next crop that they're going to harvest starting January up to around September will not be that great. Also remember, we had such a massive shortfall from the past season of around 500,000 tons. Now the market is still trying to work through that kind of deficit, and just right now it's a reality check of we don't have a very good crop coming out of West Africa, and we also have such a massive deficit that the market has to rally so that there is that price discovery and equilibrium between what's available in the market and the price that people have to pay for that cocoa.
Mumbi, dig into that. What does this mean for the companies and also for consumers?
Higher costs, obviously, especially for companies like Mondelez, Mars, Nestle that use lots of cocoa for their chocolate. And even worse if you're a company like Nestle that also has to do with coffee, and coffee prices have also rallied to record highs. So for those companies, it's really increased costs, squeezed margins for them. And then for consumers, then we'll have to see higher prices for us because it's hard for these companies to absorb all these costs by themselves without passing on some of that cost to consumers. So if you're a chocolate lover, expect your bar of chocolate to be slightly more expensive as we get into the season and as we get into the next year. And if you're a coffee lover, then expect your espressos, your lattes also to be a lot more expensive.
Oh, great. Good news for many people. But demand is rising, as we were talking about yesterday on the show. Mumbi Gatau, she's our soft commodities reporter there. Thanks so much, Mumbi, for joining us. And let's take a quick check at where markets are positioned. We mentioned it is the Fed day, and we're waiting to see what the dot plot looks like. But right now, U.S. equities tilting to the green. Euro Stock 50 futures, though, not doing too much, but still all eyes are on what we do get from the Fed and the decision and how that percolates throughout the rest of the global market. But we're going to leave it here for today. That is it for Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.